privileged to welcome a speaker whose reputation for rigor and insight precedes him. Please join me in inviting Mr. R. Srinivasan, CIO Equity at SBI Fund Management. Mr. Srinivasan brings 30 years of experience in financial services and with SBI Fund Management since 2009. First as head of equity and now as CIO equity. He holds a Master in Commerce and MFM from University of Mumbai. Under his stewardship, SBI has oversees currently 11.5 lakh crores in total AUM, including 6.8 lakhs in equity, making it India's largest equity manager. Notably, the SBI small cap under his management, which Mr. Srinivasan himself manages, has delivered an annualized return of over 19% over last 10 years, comfortably outpacing the category averages and benchmark. So I'm sure we have a lot of insights and learnings from his experience and background. Again, he will share his bottom up investing philosophy, valuation discipline through rate cycle, and practical goal-based strategy, drawing in his work based on his SBI Children Benefit Fund, which he is managing. Before I hand over to Mr. Srinivasan, we will kick off with a quick poll to capture your views and tailor today's discussion. So we have just posted one poll right now in front of your screen. My request to everyone is quickly take this poll. So Mr. Srinivasan can also know the attendees, right? Their understanding of markets and all that. So Mr. Srinivasan, our idea for this poll is to get idea about the attendees, right? What do they understand so that we can curate the session in a better way. Yeah. So request everyone to kindly take the poll, please. So, Mr. Srinivasan, just for your insight, the questions are like typical horizon of growth in investment, what horizon people look at, and how do they rate the current valuation? Which macro factor are you watching most closely right now? How comfortable you are with the portfolio swings when seeking higher returns? And for long-term goals like children education, which structure appeals the most? I thought these questions will give you some thoughts. Yeah.
Sure.
Are we ready? Yes. Yeah. Request everyone to kindly take this quickly. We will need to start this. We'll just have 10 seconds more. Yeah. So, sir, we have some poll results coming on your screen also. Sir, can you see this?
Yes, yes, I can.
So, the first a question, the typical investment horizon for growth-oriented equity fund, 50% mention 8+ years. And I think this is a fund manager delight, right? To get people which are more than 8 years.
Absolutely.
How would you describe current market valuation? Again, people seemed indecisive. 32% feel uncertain, 27 feel stretched, 32% feel fair, only 9% feel attractive. So I think we can take this question more detailed with you. Which macro factor are you watching most closely? 45% feel domestic growth factors, 50% global market cues, 5% inflation. Fourth question, how comfortable you are with the portfolio swings when looking at higher returns. 32% feels neutral, 45% are very comfortable with volatility. And I think this is a great thing, what I think for all of us. And for last question, long-term goals like children education, which structure appeals the most? 52% feel blended growth plus debt funds. So, sir, in on this background, I will open the floor for you.
फुल
Maybe.
कंसेंसस है मेरा भी. कॉल यहीं पे क्लोज कर सकते हैं.
No, sir, we will not lose this opportunity for somebody like you here. So we want to hear more from you. Thank you.
शुरू करें. Shall I ask Preeti to
Yes,
share?
sir, you can start, please.
So we have like some slides. I didn't know this was like a master class वगैरह. आपने नाम ऐसे दे दिया. मेरे को लगा बस ऐसे ही कॉल है.
No,
So
sir, our thought process is maybe
what do you,
first,
yeah, what are you looking to achieve
sir,
with
first
this?
15 minutes, your investing philosophy and framework. That is the first part. How do you look at investing?
Hmm.
If we can get some insights on that.
Sure. Yeah,
Uh,
that I will outline quickly. फिर उसके बाद आपको मार्केट आउटलुक भी चाहिए.
maybe you can give a little insight on market outlook and then we have question and answers.
So I'll have about 20 minutes.
25 minutes, sir. 25, 30 minutes.
ठीक है, perfect. So I'll tell you what are, I'll focus on one philosophy. As a house, we've tried to articulate this, our philosophy as a house. And this is important for us even internally, not just external communication, because we have a large team. So it's important that people kind of, I mean, we are on the same wavelength in terms of what we are expecting from our analysts. So if you think about our philosophy, there are essentially two philosophy. This is an earlier slide, so I don't want to mention. So the absolute return philosophy, we used to call it the core, and the relative return philosophy, we used to call it the satellite. That is not really true. So let us just call it absolute return philosophy and relative return philosophy. Because core and satellite kind of makes one philosophy more important than the other. That is not true. It depends on which funds we are managing. So, for example, there are funds which have a long term perspective where we do not target volatility against the benchmark, as in, we do not target consistency of performance against the benchmark. We look at absolute returns in the long only context. Whereas there are funds where we are very conscious of relative return. So, how much of the absolute return philosophy and the relative return philosophy we will apply in the fund depends on the fund and the context. So that is a small correction. Think about it as a absolute return philosophy and a relative return philosophy. The relative return philosophy is the right one that is mentioned here, where we look at multiple factors. These are the key factors. Essentially, we're looking at fundamental change. We ideally want positive fundamental change. What does this mean? This means change in volumes, growth in volumes, revenues, EBITDA margins, profit, return on capital employed, cash flow. So looking for fundamental drivers and you're looking for positive change. We are looking for ideally rising market expectations, as in we're looking for upgrades rather than downgrades. The essential belief is that when there is fundamental momentum, that momentum will continue for a while. We look at technical momentum, not much of it, but we do. And relative valuations are important in this framework. We will look at other stuff like ownership, special situations. But essentially, the satellite mentioned here, which is the relative return framework, the target is to outperform the benchmark. So essentially, we're looking at everything on a relative return perspective, and we are also not that long term. When I say not that long term, anything that we do is a minimum of 3 years. We strongly believe that we have absolutely no right to win in a 1 year space. Our target prices, recommendations are from a 1 to 3 year perspective. So nothing is less than 3 years. Everything is beyond 3 years. So the relative return works, let's assume, between 1 to 7 years or maybe 1 to 5 years. And the absolute return philosophy is much beyond 7 years. So I will focus my conversation on the absolute return philosophy, which essentially is a very cliched. I mean, this is as cliched as it gets. What we are trying to do is to buy a good business run by good guys at a good price. Now, why is it so cliched? Because cliched works. And I think the immediate question on everybody's mind will be, who looks to buy a bad business? Who wants to bet with crooks? And why does someone want to buy at a high price? So the point here is that no one does. But when you focus your efforts on just these three factors, you are effectively closing your mind on a lot of the other type of investing philosophies. So, for example, the relative return philosophy, right, on the right, that is something which is very different from the absolute return philosophy. In the relative return philosophy, if I may, we're looking for positive change. Whereas in the absolute return philosophy, we don't really care about incremental change because the time perspective is long. More importantly, we might actually prefer negative change in a business, in a stock where we love the business and the management, because a negative change enables us to get a better price. So you have to recognize that these two philosophies are different from each other. And by just focusing on business management and valuations, you're not trying to be a host of other things. You're not trying to necessarily play momentum. You're definitely not trying to play momentum, whether it is technical, whether it is fundamental. You're not consciously trying to be contra. You are not benchmarking. You're kind of agnostic. You're just looking at stocks from a bottom up perspective. You're not thinking of macros. So this is very clear in terms of its approach. So I'm clarifying this because nobody does the opposite. But what people don't necessarily do is run a focused approach in terms of just wanting to buy a good business, a good management at a good price. So these are the three factors that we would focus on. I will skip the relative return philosophy. I can talk about it if you have questions. We run a quant model, which basically has four factors: quality, value, growth, and momentum, which is kind of based on this. We have 12 sub factors which are based on the relative return philosophy. We also have indicators which throw us ideas for the relative philosophy. A large part of the fund is based on the relative return philosophy. And I can talk about it later if there are Q&As. But since there will be a paucity of time, I will focus on the absolute return philosophy. Now, this is, for example, what I'm going to talk about. I'm kind of compressing it in a time of 15-20 minutes. We are doing this like a Netflix series. So every Thursday, we have an hourly session on the philosophy, and we go deeper into not only the relative return philosophy, but what does it mean? What is a good business? What is a good management? And what does valuation really mean in that context? So let me kind of quickly summarize each of this. So a good business, if I can put it very simply, is what you would expect. It is a business that has competitive advantages. Now, again, you have to be very precise in terms of how you want to define competitive advantage. We try to do that. It is interesting, not surprising, that hardly 5% of our universe will have any competitive advantage at all, which means we are dealing with a very small universe. When you think about competitive advantage, you think in terms of a right to win characteristics for that business. You think economic moat, for example. Warren Buffett has defined that pretty well in terms of a castle with a moat, and the moat is really the competitive advantage, and competitors are out to attack you all the time. So I think that is the first question you want to ask yourself. I won't say we have, it's out there. There are, but we've kind of made it uh, all inclusive. So we have defined or identified seven sources of competitive advantage. Uh, Call it economic moat. So these are, let's say, size is one, size, market share. Uh, Technology could be a competitive advantage, although short-lived in most cases. Regulation could be a competitive advantage in the pharmaceutical type sector. There is network effect. There is switching cost. So we try to ask ourselves the question: does this business have a competitive advantage? It's very interesting. For example, one of the best stocks in the market, SDFC Bank. When you kind of go back to SDFC Bank in the early 2000s, I used to be a banking analyst there then. And you ask yourself, does SDFC Bank have a competitive advantage? You'll be surprised it really didn't, because the brand wasn't very well known. They didn't have like a portfolio of products then. They actually did well in the worst business of all, which was cash management, because nobody else had focused enough on it, and they made money in cash management. From there, they built up the exchange business, and they eventually rolled out products, and they did a phenomenal job. So here is a bank or a stock which did well without any competitive advantage. Obviously, they gained competitive advantage. Today, they have the highest market share after SBI, even without HDFC for that matter. So basically, they've done well on execution. Management is not a competitive advantage. We look at it separately because managements are fungible. Like I said, in the 400 stock universe that we cover actively, hardly about, I guess, 20 stocks or 30 stocks will have a competitive advantage to start with. Then you ask yourself, is this competitive advantage, is this moat large? Is it small? Are there multiple sources of competitive advantage? Is the company investing to expand that, or is it reducing because of competition? So these are questions that you will ask about the business. All what I'm talking is on how to identify a good business. The second thing you definitely want, and these are, so we have an investment checklist. So there are about 29 questions across business management and valuation. So that kind of explains what kind of questions and what answers we're looking for. Other than competitive advantage, the extent, whether it's growing, reducing, what you need when you're looking for a good business is growth. Especially in a country like India, where I think at least my cost of equity is closer to 15%. That's my expected rate of return. So you definitely need growth. Low growth companies will struggle, even if they have fairly high returns on capital employed. So growth is important. So when you want to look at growth, it's very important that you look at the target addressable market and try to understand whether the market itself is growing, which is the growth in the market. So if the market itself is growing at 13, 14%, that's amazing because you can grow along with the market. And if you have competitive advantages, you can also hope to increase market share, which means you can grow at much higher than the industry growth rate. So you want to look at the addressable market. You want to think in terms of growth. You also want to think in terms of risks or disruption, because growth is something you need to identify whether it is cyclical or secular. Secular growth is much longer. You want to look in terms of penetration. There are a lot of sectors, for example, in India where penetration is extremely low, and you can expect growth to continue for a very, very long time. Not only the existing market growing at a certain rate, but also a lot of latent potential in terms of. So, for example, when you look at growth and you think about the addressable market, you also think in terms of the potential for the market to move from an unorganized to the organized market. So I can go on and on about business, but suffice it to say, you want to look at all aspects of business. You want to look at, like I said, competitive advantage, growth. You want to kind of ask yourself, does the company make return on capital employed? This is very important. It doesn't have to report return on capital employed, but on a unit economics basis, you want the company to be making money. So a perfect example is we bought Westlife. It hasn't done well of late, but Westlife is the McDonald's franchise in South and West. And while the company wasn't making money because they were growing and organizational costs were very significant, which is also the case for Zomato, for example, today. When you look at unit economics, the store profitability was high double digits. According to us, it was higher than 20% at that point in time. And we just had to ask ourselves this question, that whether this can be scalable and replicable over multiple number of stores. So you want to look at unit economics, because when you look at a stock, a combination, and actually most of the money that we've made in terms of multi-baggers are stocks where we had an amazing combination of growth and return on capital employed. Because when you think about it, it makes a lot of sense. And I will explain that when I get to valuations. So you want growth, you want return on capital employed. Return on capital employed is an accounting metric largely. So you don't want to be looking at accounting metrics. You want to look at cash flow. Cash flows are way, way more important than accounting profits. And there is a big difference between the two. Suzlon, for example, was a company that was making good profits, high EBITDA margins, but they were making negative cash flows, and the company eventually went bankrupt. So you have to look at cash flows, because that is what really, when you talk to a businessman who's not educated, he will only think of cash. Cash kitna aata hai ghar pe, cash kitna jata hai. So cash flows are important. I talked about risks of disruption. If the business is going to get disrupted eventually, you can't put a terminal value to it. So you want to be worried about growth from a long-term perspective. You want to think in terms of, for example, I'm sure you've heard of Michael Porter's Five Forces. There is a book which explains Michael Porter, Understanding Michael Porter. That's a lovely book to think in terms of how to analyze a business in terms of the five forces, because Michael Porter reads like a textbook, whereas this kind of explains it with a lot of particular cases globally. So you want to do that. You want to look at competitors. You want to look at suppliers. Want to look at intercompany rivalry. These are the five forces, for example. So there are stuff that you want to look. You want to ideally, for example, you want to choose a business which has low capital intensity, and that list kind of goes on. And we can send you our checklist if you like. Now, when it comes to management, that is business. When it comes to management, you want capability, integrity, and I think it is tough, for example, to assess managements. You can only do it over a period of time, because in a few meetings it doesn't come across. There are, I think every company management now speaks very smartly, but I think one way to cross reference integrity, one way to cross reference capability, is to look at past performance. And we look at, for example, when we look at a business, we look at 15 years of data, and we look for volatility in that data, and then we question managements on volatility. You see, people walk, people talk, people know what to say, which is especially true for people in our business. Fund managers say always the right things because they're good sales guys. Managements generally also are good sales guys. You want to see whether they're walking the talk, which is why you want to compare actual performance, financial data, and cross-reference that with what the management is saying. Integrity, you want to check, obviously, you Google up, you see whether there are SEBI, whether they've been indulging in stock rigging and the multiple of those, and a lot of stuff. This is a shade of gray because if you're holier than thou, then your investment universe shrinks significantly. But essentially, you get the point. We do that because we are able to engage with managements. And management, I think it's a function of how much time we would like to spend, because managements are very happy to spend their time. A very important part of an investment process, which kind of is applicable for that management factor, is channel check. So especially on an IPO, on existing listed companies, we at least have experience in terms of having met the company for a very long time. So we know what they've been saying, what they're doing. But in IPOs, we place a lot of importance on channel checks. So we do at least 15, 20 channel checks, and we speak to competitors, we speak to the entire ecosystem, and we get some really good feedback, which we can again go back to management and kind of figure out whether there is credibility in that kind of feedback that we've got. We place a lot of importance to it, especially on the financial sector where there is leverage, which is why if you look at our performance over the last 10, 15 years, a lot of the alpha has come from not having made significant mistakes, as in we haven't had stocks which have fallen significantly, and we haven't lost money in such stocks. Generally speaking, I'm not saying that we never made mistakes. I'm saying that we've made fewer mistakes because we have a forensic model, and we give a lot of importance to channel checks and feedback that we get. We prefer to avoid a stock that might still go up 5x, 10x if you're not convinced, rather than take the risk. Doesn't mean we are conservative, but we, I mean, suffice it to say that we put a lot of importance to channel checks and the forensics. Now, when it comes to valuations, I'm cognizant of the time here. Shall I move? Okay, already close to 20 minutes. When it comes to valuations, again, valuations is not about P multiples and price to book multiples. Valuations is about forming a thesis on a business and marrying that thesis to a cash flow model. So when a certain thesis with a secular outlook will entail a second stage, a double stage DCF, where the second stage could extend as much as 15 years. Exceptional cases, it goes up to 20 years. Typically, it is 10 years. But there are businesses which are cyclical, where the second stage won't exceed more than 5 years. So the point is, you need to have a thesis around the business. You need to marry that thesis on the cash flow. The P multiple, eventually, when you think of a P multiple, what is a P multiple? P multiple is a function of three factors: growth, return on capital employed, and cost of equity. Now, if you kind of reduce it further, it is effectively just, and this is mathematical, it's just a function of growth and the spread of return on capital employed over cost of equity. And you can have a multiple of 50 or you can have a multiple of 10. People think that 10 is cheaper than 50. It is not, because 50 could be a function of growth because it is a static number. You're looking at a P multiple for a certain year. You're looking at a P multiple for FY26. You're looking at a P multiple for FY27. Growth does not. So if there is longevity in the business model, and if the company can grow at double digits for 10 years, 15 years, and in India, interestingly, there are a lot of businesses that can, then you don't mind paying a large multiple. You obviously don't want to extrapolate or project too long because there is a huge risk in terms of projections. But you want to give that benefit of doubt where companies have one, competitive advantages, they have a long growth window, and the risk of disruption is low, and return on capital employed is high. So valuations will also need to be captured in terms of the strength of the business franchise and the quality of management. A good quality management, for example, also changes the business model, latches on to newer stuff. These are option values that they create, which is why valuations in terms of a number will not necessarily capture everything. So basically, that is the essence of the absolute return philosophy. Now, let me again qualify: a good business and a good management will always be expensive. So, what does it really mean? I think you have to think in terms of a combination of these three. It is not possible to give a weightage by giving them some score, because that weightage will not capture the intensity of each factor, right? Because every factor has a range of intensity, and the intensity will also have to be combined together along these three factors. So that is where the art of investing comes in. Now, I've spent hours or weeks or months discussing the art of investing. The art of investing is basically about thinking in terms of probabilities. So when you make an estimate, you have to make an estimate thinking. So if the probabilities are not factored in your expectation, then it is faulty from T0. So probabilities are extremely important. You want to reduce the whole complicated business model mechanism into something more simplistic. So we give a lot of importance to simplicity. So there are, like, again, 7 mental models. We call it the philosopher's stones, which go and play a role into what we call the art of investing. So simplicity, probability, unpredictability, how much you know, what you don't know, much of that you can factor, exponentiality. So there are 7 such factors which we look at subjectively. So that's broadly. I'll close the philosophy discussion there because it is getting too philosophical. Can move to the next slide. That captures the investment process in terms of what we do. I won't spend too much time here, but essentially, we start with idea generation. We run screeners because we have a large team. We're meeting companies all the time. So when some company, for example, yesterday evening, I met a company which was talking about using flue gases to generate captive power. And the immediate question that I would ask is does the boiler belong to Thermax or does it belong to somebody else, right? So ideas keep coming from meetings, they come from screeners, they come from the fact that we're tracking and meeting companies all the time. Scuttlebutt is what I was talking about, where we are doing channel checks all the time. That's very important. Then desktop rigor, for example, we have a basic hygiene in terms of what it means when a stock is in our universe. So there are like 1,000 stocks out there. which we look at, but our active universe is only 400 stocks. In all those 400 stocks, there are four things that we need to classify it as an active universe. We need an earnings model, we need a recommendation, we need a target price, and we need an annual report analysis or a quarterly analysis and stuff like that on a periodical basis. And obviously, we do the moat vote where we look at whether there is a moat and stuff. Then you have the investment thesis. This actually is the most important part, where you say why you like the stock or why you dislike the stock. The factors are clearly mentioned. And when you kind of track the uh, performance of the stock or the performance of the underlying business, you basically want to link it with what your investment thesis is. So a key reason for us to sell is when our investment thesis goes bad. And this is an advantage in public markets because you can afford to make mistakes, get out. It's important that you identify not before the stock starts falling, but at least once it starts falling. And investment thesis plays a very large role. Portfolio construction again is important because eventually attribution comes from sizing. Most smart portfolio managers and smart fund houses do not live up to their potential because they do not size up their bets well enough. I think there are various factors why people don't size up their bets. The biggest factor which we've tried to take out is job security. So if you size up, if you take active risk, you also subject to higher volatility, and people prefer to be mediocre. But I think sizing is a very important aspect. Buy sell decisions, dealers play an important role. Execution again is very basic. We have a very strong dealing team. I think we get some of the best deals out there, not only because of our size, because also of the market intelligence of the dealers. Then obviously you got to kind of run it full circle. You got to monitor whatever you're doing on a regular basis, because these are not one-time stuff. This is something that you do. Investment process is about walking the talk. It is a very it's a boring exercise. You just got to keep doing. Actually देखने जाओ ना, most चीजों में आपको क्या करना है वो पता है, but वो करना जरूरी है. So to monitor that and do it on a regular basis with frameworks. So we have, for example, a quant model, which is based on how an analyst is supposed to think, and then we reconcile that with the analyst views and figure out why there is a difference. We have a forensic model which throws up red flags for companies. We have a primary research guy who travels across India. I also do. I love to drive, so I'm away for like 2-3 weeks, sometimes in the north, sometimes in the south. It gives us the from the ground perspectives and has helped us in stock picks multiple times. So I think just the monitoring aspect is very important. So that kind of explains the philosophy and the process broadly. Do you want me to stop here and quickly run you through the market outlook? Because I thought you wanted me to speak about
Yes, sir. I
it.
think
We can
that
take 5 minutes for that.
yeah, we can take that, sir.
So why don't you just go to the अपना जो आउटलुक है इसमें डाला नहीं है एसेट एलोकेशन फ्रेमवर्क नहीं वो स्लाइड नहीं है ना फ्रेमवर्क वाला स्लाइड ओके I don't have that slide, so let me just explain what we do. What was the earnings? That slide was on slide. Yeah. So I'll just explain what we do very quickly here. So we look at, so we have an, so पहले अगर आप मेरे को पूछते बाजार क्या लगता है, I would have told you मेरे को नहीं पता, and I used to do that before 2019. But around 2019, just pre-COVID, and it is not like a frivolous statement जब मैं बोल रहा हूँ कि मेरे को नहीं पता. मेरे को actually जरूरी नहीं है ये जानना कि बाजार क्या करे. Because and this is very important for you guys to understand कि we are relative return investors. मैं कोई absolute return promise नहीं कर रहा हूँ. मेरे को बेंचमार्क को आउट परफॉर्म करना है. कल को बेंचमार्क घटेगा 20% and I fall 15%. All investors might be unhappy, but I'll expect them to stand up and clap for me because I'm outperforming by 5%. So our job is outperforming, which is why generally as a house we haven't cared too much about what the markets will do. More importantly, we think we don't know. So when you think in terms of probability, we think our ability to capture what the market will do, project the market upside or downside in the short term, the hit rate is not good enough for us to. तो हम आपस में कभी किसी को पूछते नहीं तेरे को क्या लगता है मेरे को क्या लगता है, because nobody respects anybody's view. In fact अपने आप पे तो जोक है, मैं बीच में ऐसे ही शॉर्ट करता था निफ्टी तो लोग लॉन्ग करते थे, बोला वासन ने शॉर्ट किया तो बाजार चलेगा, फिर मैंने शॉर्ट करना बंद कर दिया. So I'm starting with a qualification. But what we did around 2019 was we created a lateral team which worked on an asset allocation framework, which is a very objective model which we backtested, on which we run the balance advantage fund. Right. So that is the house view, and that is an objective top-down view. Also, it captures bottom-up stuff, which tells us whether we are one, positive or negative on equity, two, to what extent are we positive or negative, मतलब underweight है तो कितना underweight है, and it will give you some sense on what is happening on each of these parameters. So we look at earnings, one, we look at valuations, and we look at sentiment. Valuations and sentiment go to deciding what kind of weight we will have. To give you a sense, I don't have that chart unfortunately. December, we were 60% underweight equity. So this is against a 50 equity, 50 debt benchmark. We were 20% equity. The model was negative. So in the last 20 years on a backtesting basis, the model has gone to zero equity, I think 2 or 3 times, and it has gone to 100% equity 3 or 4 times. We were 20% on December. We moved up to neutral right now. So it went up to 40, I think, Feb end. And right now we are at 60. 60 is actually 50. We neutral, for example, is 10% higher for us because we move in buckets of 0, 20, 40, 60, 80, and 100. So the model is right now neutral. This model is only applicable for large caps. I'll quickly speak about earnings, for example, have been very disappointing this year. We have a hope thesis that earnings will kind of come back because we don't really see anything wrong with the economy per se. Consensus earning estimates are also close to 15-16%, though FY25, the actuals were way lower than consensus. On valuations is where we had a huge problem because if we look at something called the Shiller PE bond yield spread, which is basically Shiller PE is, and you can Google Shiller PE, it basically accounts for earning cyclicality and adjusts for inflation. So we also take out bond yields from it because bond yields have played a very large part over the last decade or more because bond yields went to almost zero. So when a bond yield goes to zero, effectively your PE goes to infinity essentially because you're getting money and actually negative also at some point. 8%. The multiple for that GSEC is 12, 100 divided by 8. If the GSEC goes to 5, the multiple is 20. 20 is not higher than 12. 20 is equal to 12 because you want to map your PE to the yields. So the fact that yields have been coming off in India makes valuations cheaper. And we do that when we look at the valuation multiple. And we have something called a sentiment index. This is something we constructed. It's correlated very strongly with 1 year forward returns. And sentiment index is important so that you don't sell early in a rally and you don't buy early in a fall. So market typically overshoots both the top and the bottom. And we have like, I think 14 or 16 factors that we look at. Factors such as value vis-a-vis growth, large cap vis-a-vis small cap, primary market fundraises. There is also a ticker. We have multiple keywords of Google search for multi-baggers or stock ideas. And this actually has a very nice score. So if you look at this chart that Preeti is showing, the gray line in the background is 1 year returns, 1 year forward returns. And the blue line is the proprietary sentiment index. So when sentiment is bad, you want to buy. And when sentiment is good, you want to sell. Right? It's a contraindicator, obviously. And you see so whenever the blue line is down, 1 year forward returns are pretty attractive. The valuation, again, the earlier chart that we showed, the Shiller PE bond yield spread, has strong correlation with 3 year forward returns. So when we were negative, for example, our expectation of 3 year forward returns were less than 9%. And typically, equity risk premium has been in the range of 6.5%. So we said you need a return of almost 13% if you want to be bullish on equity. And we are there, right? So that's the market. We are neutral. Again, let me specify. This is the large cap because the data on small cap is not good enough. When we think in terms of the breadth of the market, we are very negative on the small and mid cap space because if you look at, I think वो chart है ना, sentiment index का next slide. If you look at the right chart, that is the large cap that is Sensex over BSE 500. In fact, BSE 500 is still 70% large cap, mind you. If I do the same chart of Sensex over small cap, it will be even more star. So you see, since December 2005, even today, after the fall in small caps by 20%, the underperformance of large caps or large caps as a percentage of the broader market is still at the lowest level that it has been in the last 20 years, right? So we think small mid caps are definitely expensive, and we would want to stick to large caps if capitalization is important from a portfolio construction perspective. I'll stop there, and you can take questions.
So thank you very much, Mr. Srinivasan. I think your insights on your framework as well as market outlook were very, very, very detailed and specific. So thank you very much for that. I'm coming to some very generic question, and trust me, the result as an investor, what we look at bottom line is if I invest for 5 years, 10 years, मेरा पैसा बनना चाहिए, right? I should be able to beat inflation, right? I should be able to generate say what you mentioned, right? 13 to 15% long-term equity returns, right? But if I look at data, and I think there was some study which has been done by one mutual fund in India, the investor return versus investment return, because that is one area of strong value addition you can give it to most of our investor. हम सब लोग को पता है इंडिया में ग्रोथ है, पैसा बनेगा, लेकिन people end up selling at the wrong time and buying at the wrong time. And I think that is where the greed and fear theory comes in. So maybe with some of your case studies or examples, how you have managed these situations and how investor can behave well, that will be something very, very valuable for all of us. That how our investment return and investor returns are aligned. We are matching that. वो होता नहीं है. आई नो ग्लोबली देयर हैज बीन स्टडी 4-5% रिटर्न गैप होता ही है उसके अंदर.
See, this return gap happens because people churn.
या
So I think once you identify, we do the same thing when we pick up stocks. So obviously we run a churn portfolio, but the churn portfolio does not do as well as the long-term portfolio. So अभी मैं आपका मेरा personal example बताता हूँ. So I have access to the entire team. I have access to all models. We can't buy stocks. We can buy only funds. But I can allocate across equity and debt conceptually. मतलब अगर मेरा मार्केट टाइमिंग मॉडल पे मेरे को इतना मैंने ज्ञान दिया एंड आई थिंक इट्स गुड, तो मुझे भी वो थोड़ा बहुत इंप्लीमेंट करना चाहिए. मैं नहीं करता हूँ. मेरा 100% पैसा इक्विटी में है. इंक्रीमेंटल पैसा भी इक्विटी में ही जा रहा है, राइट? एंड माय रिटर्न्स आर ऑब्वियसली बेटर बिकॉज मैं दिमाग नहीं लगा रहा हूँ ऑन अ शॉर्ट टर्म फ्रेमवर्क, बिकॉज मेरे को शॉर्ट टर्म में वो ऑप्टिमाइज नहीं करना है, बिकॉज प्रोबेबिलिटीज आर नॉट इन माय फेवर. तो मैं अगर आज के दिन में सो जाऊं, 10 साल के बाद उठूं, तो मेरे को बीच का वॉलेटिलिटी से क्या लेना देना. और मेरा भी फ्रेमवर्क एंड स्ट्रक्चर वैसा ही. द मनी दैट आई एम इन्वेस्टिंग आई डोंट नीड. मोस्ट पीपल हमारी इन्वेस्टमेंट टीम में ये मैंने इतना ज्ञान देने के बाद आके यही पूछेंगे अभी डालूं क्या. मैं बोला ये क्या सवाल है यार, पैसे नहीं चाहिए कभी भी डालूं. So this is something which is very simple. People are not able to do it because they are not disciplined, which is where I think people like me, people like you, for example, play a large role. I think your job or my job, if I am a distributor, not a manager or a manufacturer, 90% of my job is to manage the behavior of my client. बस मेरे को फंड भी सिले एक्चुअली ये जो ज्ञानबाजी है ना, मेरे को बोलना नहीं चाहिए. ये फंड से सब फंड 19-20 का फर्क है. कोई भी लार्ज कैप फंड ले लो यार, एसबीआई ले लो, एचडीएफसी ले लो, कुछ भी ले लो, या रिलायंस ले लो, वो सब बोलेंगे अच्छा अच्छा, कभी कोई करेगा अच्छा, शायद कोई थोड़ा बेटर करेगा, बट सब 19-20 का खेल है. द मोस्ट इंपॉर्टेंट पार्ट फॉर अ क्लाइंट इज एसेट एलोकेशन. सो ऑल ही हैज टू डू is stick to that, arrive at that allocation in a scientific basis based on what money he needs, what he spends, what he has, what is coming to him. And I don't have to discuss all that, you know that better. And then stick to it. मैं तो बोलता हूँ कि 90% तो वही करना है. अपने बर्थडे में चेंज करते रहो. फंड मैनेजर जो बोलता है मत सुनो. बाजार ऊपर गया तो बेचो, नीचे गया तो खरीदोगे. स्टिक टू योर एसेट एलोकेशन. एंड वन पूल ऑफ मनी should be always invested in equity. भूल ही जाओ डाल के, समझो ये चोरी हो गया. एंड जो दिमाग लगाना है ना, वो खुद के खुशी के लिए करते हो. एज इन यू वांट टू फील गुड अबाउट योरसेल्फ कि कुछ तो कर रहे हो यार, इतना आइडल रहोगे तो कैसे चलेगा। जो लोगों के पास पैसे हैं वो लोग काम इसके लिए करते हैं कि उनको लगता है कि लाइफ में कुछ पर्पस चाहिए, जरूरी नहीं है। तो ये जो 10-15% में दिमाग लगाओ कि ट्रम्प क्या कर रहा है, करेंसी में क्या हो रहा है, बिटकॉइन भी कर लो, but it won't matter to your portfolio returns. So once you follow this discipline, once you're clear about this, then portfolio returns have to match investment returns. मतलब उसमें कोई this is not rocket science.
Sir, if I may ask you this question, a Japanese investor would have thought 30 years back, and I think the equity returns in 30 years has been zero there, right? Again, I'm just putting that, right? So, uh,
जापानीज टू चाइनीज इन्वेस्टर,
was
15 साल के बाद 50% नीचे था चाइना का इंडेक्स, तीस
correct,
साल के बाद फ्लैट था, 30 साल। तो
right?
ये भी सही है, आई एम ग्लैड यू ब्रॉट दिस पॉइंट। कुछ गारंटी नहीं है लाइफ में,
Correct.
मतलब अभी इंडिया ने दिया है तो इंडिया को कल भी देना है, तो ये रिस्क तो है। बट आई थिंक द वे वी आर ग्रोइंग, द वे वी आर पोजिशन, एंड आई थिंक इट इज ऑल्सो बायस बिकॉज आई एम एन इंडियन, और वो यू कैनॉट रिमूव दैट पेट्रियोटिक सेंटिमेंट। बट द फैक्ट फैक्ट भी है ना, यहाँ पे पॉपुलेशन है, ग्रोथ यहाँ पे है, और पॉलिटी भी यहाँ पे है इन टर्म्स ऑफ अ डेमोक्रेसी। सो आई थिंक थिंग्स आर, see, we still haven't delivered, nowhere close to our potential, but we've been fine. So I would want to not think about India as a China, or for that matter, a Japan. But yes, कुछ भी गारंटी नहीं है लाइफ, हो सकता है यार। I mean, is there a, it's not a zero probability that
Right.
returns in equity will not be good enough. I agree, which is why asset allocation is important.
Right. Right. Sir, I'm just coming to maybe since you have been managing money for so long, or mistakes are something which are bound to happen, right? Maybe couple of and you have mentioned, right, when your key thesis goes wrong, आपने जिस चीज के लिए उसमें इन्वेस्ट किया वो अगर नहीं बैठता है, you sell the stock, right? And maybe we lose also money in that exercise, right? So, sir, some of these learnings, maybe you want to share with investor how we can learn from all those things, right?
एक इंटरेस्टिंग डेटा पॉइंट बताता हूँ, अगर आप मेरा ट्रेड्स एनालाइज करो ना, यू विल फाइंड कि जब मैं बेचता हूँ, जब भी बेचता हूँ तो लॉस में बेच रहा हूँ। मतलब मेरा कॉस्ट ऊपर है, सेलिंग प्राइस नीचे है, मतलब मोस्ट ऑफ द टाइम। और जब मैं खरीद रहा हूँ ना, मैं ऊपर में खरीद रहा हूँ। अब आप बोलोगे ये ट्रेड सिर्फ एनालाइज करो, तो ये तो एकदम ही इज अ डम पोर्टफोलियो मैनेजर, बट द फंड्स हैव डन वेल। सो मतलब ऐसे कैसे हो सकता है? सो दिस होल कॉन्सेप्ट, सी मार्केट, एक तो यू हैव टू रिस्पेक्ट द कलेक्टिव विजडम ऑफ द मार्केट। Market is always 2 steps ahead of you. You don't need to be ahead of the market. You need to be ahead of the market from a longer term perspective. Why does this happen? Why do I sell at a loss? Why do I buy at a higher price? Because when I'm buying a stock, I have a certain thesis. My confidence on that thesis develops over time. And when the thesis over delivers, which means, for example, हमने जब पेज खरीदा, हमको लगा कि इसमें अर्निंग्स ग्रोथ, मतलब अर्निंग्स डबल हो जाएंगे 3 साल में। एक्चुअली वो 26% ग्रोथ के बजाय ग्रोथ एक्चुअली 40%। सो द थीसिस वाज बेटर। 40% आया तो बाजार तो देख रहा है ना, मेरे पास कोई ऐसा कोई खास इंफॉर्मेशन एसिमेट्री नहीं अपार्ट फ्रॉम द रिसर्च आर्बिट्राज। तो स्टॉक चल गया, मेरे को भी कॉन्फिडेंस बढ़ गया, तो वी स्टार्टेड बाइंग दैट। एंड आई कैन गिव यू अदर रीसेंट एग्जांपल्स। 500 में खरीदना शुरू किए, लास्ट लॉट हमने 1200 में लिया, डबल में, एंड वी स्टिल मेड अ लॉट ऑफ मनी बिकॉज अभी तो अलता वलता भाव है। So you're buying higher because your thesis is working, and you got to keep thinking about that and say that this is better than mine. And why do you sell? Because thesis गलत चले गए, गलत तो जाते ही हैं, मतलब 3 से 4 out of 10 तो होता ही है गलत। बट द एडवांटेज ऑफ पब्लिक मार्केट्स कंपेयर टू प्राइवेट इक्विटी इज गलत गए तो बेच दो। सो यू सेल, डजंट माइंड व्हाट योर कॉस्ट वाज, कलर ऑफ द मनी इज द सेम। नुकसान हो रहा है तो भी बेचो, बिकॉज वही पैसा मैं कहीं और डाल दूंगा। So ये जो mistakes है that are inherent. I don't know whether this was the question. I think you were asking कि गलती कहाँ कहाँ पे होती है। तो गलती, ये जो मैं philosophy बता रहा था ना, वो हर एक सवाल जो हम पूछते हैं about the business, about the management, सब लेवल में गलती होती है। किर्लोस्कर ऑयल इंजन हमने खरीदा था, we had a very strong view about the management, we liked the business model। वही मैनेजमेंट जाके डिसाइड किया कि फाइनेंशियल सर्विसेज में जाएगा, and we got completely cheesed off. We couldn't sell, liquidity was not good enough, we sold. So most of the time, whether it is most of the stocks where we've exited, where we've made a mistake on the management, 1% was a disaster for us. I made money on 1%, it's still the highest attributed, but our house, we bet too much on the management, right? uh, and there are umpteen examples, but most of it related to misjudgment on managements. Some part of it is also because of being too optimistic on the underlying business. And when you pay too much for a stock, it impacts relative return. But India में अभी तक paying too much has not impacted returns significantly. As in US में हुआ है. In low growth markets, when you pay more, I think the impact can be very substantial, because even good companies with good managements can fall significantly if you buy them more expensive. इंडिया में क्या होता है कि अगर तुमने खरीद भी लिया डीमार्ट को थोड़ा महंगा, वो relative return impact करता है, तो वो हम portfolio sizing से manage करते हैं.
Correct. Sir, one of the key thing as an advisor, when I meet a lot of clients, out of their net worth, I see still 60-70% of their money is real estate driven right now. 50-60% is in real estate, or very concentrated portfolios they are running. Either if they got ESOPs, 50-60% of their net worth is in ESOPs, a single stock. I think this concentration, though, can generate outsized return, but at the same time, it can create havoc also, accidents also. Any advice to this concentration part? And you mentioned the sizing part, right? You mentioned sizing has played a lot of role in your long-term good returns of the portfolios, right? So how do we manage diversification and concentration? I think this is a very, I know it's an art of investing. You have to align there. But any science behind it or anything you cracked it there?
Yeah, I think there's a clear way to think about it. One, to diversification is a free lunch. You should take it, right? The problem with and if you diversify too much, then you will compromise on returns. So basically, one of the mental models for the art of investing is balance. हर एक चीज में है ना आपका एक गोल्डन मीन होता है. इन्फ्लेशन, ग्रोथ, डिवर्सिफिकेशन, कॉन्सेंट्रेशन, यू हैव टू अचीव दैट बैलेंस. अभी वो बैलेंस कहाँ पे है? अभी फॉर एग्जांपल यू आर सेइंग कि 65-70% in real estate. Real estate is not a bad asset class. It's not been a good asset class over the last decade or so. But if you look at the time before that, typically real estate in emerging markets follow equity. But then you also real estate में भी stock selection होता है. अभी बॉम्बे में जाके आप महंगा वाला स्टॉक खरीदोगे, it is like buying an expensive stock which will not give you returns. और the problem with real estate is आपका कोई उसमें economic yields are very low. आज के दिन में 2% rental yield है. तो मेरे को अगर सपोज मेरा रिटर्न एक्सपेक्टेशन इज 15%, लेट्स से 15 इज अ वेरी हाई बेंचमार्क, लेट्स से मेरे को 12-13% चाहिए. अगर मेरा रेंटल यील्ड 2 है, खर्चा भी है उसमें 0.5, तो मेरे को 10% सिर्फ अप्रिसिएशन से चाहिए. तो अगर आप वो अप्रिसिएशन कंपाउंड करो, यू हैव टू बी श्योर कि भाई ये उतना भाव हो जाएगा. अभी फॉर एग्जांपल जस्ट अ फ्यू इयर्स बैक, माय ब्रदर इन लॉ स्टेज इन द यूएस, ह्यूस्टन में. उसके पास मतलब एक रिजॉर्ट जैसा घर है, बड़ा घर है, सीलिंग बंगलो है, बाजू में बड़ा लेक है. मतलब वहां पे हम लोग यहाँ पे रिजॉर्ट में पता नहीं कितना देते हैं ऐसे घर में रहने के लिए. दैट हाउस वाज $500,000. एंड यू वोंट बिलीव, मैं थाने में रहता हूँ, माय हाउस वाज क्लोज टू $500,000. 3 bedroom फ्लैट है. मतलब मेरा कितना 1100 1200 होगा स्क्वायर फीट कारपेट, और उसका तो कारपेट भी बड़ा है, जगह भी बढ़िया है. तो कितना जा सकता है बॉम्बे का? अभी दैट माइट हैव बिकम $1 million. दिस इज काइंड ऑफ रिमेन फ्लैट. नाउ विल दिस, इफ इट कंपाउंड्स एट 10%, इट हैज टू डबल इन 7 years or so. तो मतलब ये अभी जो मेरा घर होगा शायद 4 करोड़ का. अभी 4 करोड़ तो मेरे को समझ में ही नहीं आता थाने में, बट 8 करोड़ होगा 7 साल में, 8 करोड़ होगा, 16 करोड़ होगा, या मतलब नहीं बनता बियॉन्ड अ पॉइंट. सो यू हैव टू, बट व्हेन यू डू द सेम थिंग, अभी जाके तुम पनवेल के उधर या अपना नया एयरपोर्ट आ रहा है वहां जाके ले लो, वहां पे ऐसे ही 5 गुना बन जाएगा बिकॉज एयरपोर्ट आ रहा है. सो दीज आर कैरेक्टरिस्टिक्स ऑफ स्टॉक्स. So you can't think of real estate as a homogeneous basket. Depends on what you pick up. It's not a bad asset class. यू गो टू अप्लाई योर माइंड। आंख बंद करके ऐसे ही कुछ लोगे तो आपका नहीं पैसा बनेगा। लास्ट डेकेड में तो नहीं बना, बट आई थिंक रियल एस्टेट साइकिल माइट पिकअप अगेन।
Right. Sir,
डिवर्सिफाई तो करना ही है, उसमें कोई सवाल नहीं।
sir, one question, and I think I'm sure you face this daily. I think unprecedented flows आए हैं in mutual funds, right? Last 1 2 years, where you are getting SIP book of 25 30,000 every crore every month coming to fund houses. I
Yeah.
think as CIO equity, I just want to get in your mind that how do you face this challenge, right? To find new ideas for this new money which is coming like unprecedented level, right? And how do you ensure long term alpha बनाएंगे हम उसके ऊपर? I'm sure it.
I think this will impact future returns. Yeah, I'm very convinced that too much money is chasing too few stocks. We are paying, so we've been worried about valuations for a while. हम ही बोलते हैं कि ये तो बहुत महंगा है और हम ही खरीद रहे हैं, which is so ridiculous because हम कैश में बैठ नहीं सकते, हम relative return investors हैं. And I think valuations are definitely high for most of the broader market. And this will impact future returns. So it will be very tough to map past returns into the future. So जो लोग बोलते हैं ना कि 15% आपका बना है, 800 गुना हुआ है 42 से आते 43 years, अगले आगे जाके definitely नहीं हुआ है. It's going to be very tough. So supply has to increase. We are pushing with the regulator to open up the foreign limit. LRS तो खोल के रखे हैं, $2.5 लाख डाल सकते हैं, हमारा लिमिट बंद करके रखा है. एंड हम जब देखते हैं ना, वी लुक एवरी सेक्टर में देयर आर स्टॉक्स which are so much better and they are trading at half the multiples that the Indian stocks are trading. तो हमने लॉन्जा लिया, we exited लॉन्जा is half the multiple of DVs. Alphabet today is trading at 16 times. और ऐसा नहीं कि ग्रोथ उसका बहुत कम है, वो भी 15-16% में ग्रोथ हो रहा है. उसका डिनोमिनेटर में सिर्फ अभी सर्च है, बाकी सब 1 मिलियन कार्स ऑटोनोमस ड्राइविंग प्लेटफॉर्म में है. उसका यूट्यूब पूरा मोनेटाइज नहीं हुआ है, क्लाउड नहीं हुआ है, अभी तो जेमिनाई भी है. और तो बाहर आप देखो ना, जनरल थोड़ा आंख खोल के देखो बाहर, वो छोड़ो. एक्चुअली ये जो सब बेच रहे हैं एमएनसीज इंडिया में, देयर वाज अ पॉइंट इन वी यूज्ड टू ओन शेफलर. एक बार मैं ऐसे ही देख रहा था, अपने एनालिस्ट को पूछ रहा था कि यार तूने देखा है शेफलर का प्राइस, शेफलर का मार्केट क्या, एंटरप्राइज वैल्यू मार्केट क्या was -$100 million if you accounted for 100% of the Indian state. मतलब वहां का धंधा फ्री नहीं था, आपको पैसे मिल रहे थे वो धंधा खरीदने के लिए. सो और आज के दिन में बहुत सारे हैं, इंडियन मल्टीपल्स आर सो हाई दैट. और इसका रीजन लोग यही बोलते हैं, अरे लेकिन तुम खरीद नहीं सकते हो. अरे बट मार्केट इज सेइंग समथिंग अबाउट द फंडामेंटल वैल्यू. सो
So is this advice कि अगर if you have money you should diversify geographically, right? You should go
100%, 100%.
because I think we are too much in those 500 stocks. All the money is going, right?
या एब्सोल्यूट, भाई बिल्कुल करना चाहिए, मतलब एटलीस्ट एचएनआईज को तो करना चाहिए.
Right, right. So you recommend that $2.5 lakh limit one should use that,
बिल्कुल
right, to
बिल्कुल बिल्कुल.
spend the money. And I think if regulator allows funds like you to invest, you would get this more meaningfully, right, in your fund if this is
हमारा
allowed.
लिमिट है ना, तो हमारा लिमिट एग्जॉस्ट हो गया और हम लिमिट फंड्स के लिए यूज करते हैं. अभी
Mm-hmm.
यही चीज हम गिफ्ट सिटी में करें, एलआरएस कैप्चर करें, तो हो भाई,
Correct,
तो वील
correct.
हैव टू लॉन्च अ प्रोडक्ट फॉर द एलआरएस मनी.
Outbound fund you can launch.
करेक्ट करेक्ट.
Sir, I think one question and I know this fund you have been managing, this children gift fund, which is a more goal driven fund. And as a financial planner, I thought this is a fund I want to discuss with you. If I have to look at for my child who is 10-year-old now, what is the best way to create money for his education, for his future goals? And how should we look at it? I'm sure when you conceptualize this product, there was some thought process. Maybe you can share something on that, will be helpful.
सच बोलूं क्या,
Yes.
ऐसा कुछ नहीं था. ये द फंड इज डूइंग वेल बिकॉज इट इज द स्मॉलेस्ट फंड इन आवर स्टेबल. व्हाई इज इट द स्मॉलेस्ट फंड? बिकॉज इसमें फ्रिक्शन है. हमने जब ये फंड रेज किया था, हमारे को 70 करोड़ आए. वी नॉर्मली रेज 15,000 crores 12,000 crores इन एनी फंड. आई वॉज द हैप्पीएस्ट. सेल्स गाइस की तो लग गई 70 करोड़ क्या होता है यार, सब घर पे जाओ टाइप्स. बट आई वॉज हैप्पी बिकॉज वॉट यू कैन डू विद 70 अभी भी, मतलब बिकॉज द रिटर्न्स हैव बीन गुड, वी गॉट अ लॉट ऑफ मनी. आई डोंट थिंक ये बच्चों का पैसा है, ये बच्चों के नाम पे डला है. तो ये अभी फंड का साइज है 3,500 करोड़. 3,500 करोड़ स्टिल द स्मॉलेस्ट फंड यार. इसमें पूरा यूनिवर्स हमको अवेलेबल है. हम नया नया स्टॉक ढूंढते हैं इसमें. और वो मोटिवेशन हमको है नहीं म्यूचुअल फंड में, बिकॉज अभी मेरा जो हाइब्रिड फंड है 75,000 करोड़, फोकस इज 35,000 करोड़, स्मॉल कैप इज 35,000 करोड़। मतलब उसमें अगर मैं 2,000 5,000 कंपनी करोड़ का कंपनी ढूंढ के भी क्या करूं, माल तो मिलेगा नहीं। So the reason we're doing well is because it's a small fund. That is the truth, right? Now I think it is a good framework because लोग जब डालते हैं चिल्ड्रन बेनिफिट में, उसमें वो बच्चे के नाम पे डालते हैं। मेंटल एक उनका दिमाग है कि ये बच्चे के लिए, तो दैट इज अ गुड थिंग बिकॉज देन दे आर नॉट लुकिंग टू टेक दैट मनी आउट when they want to buy a flat or a bike or a car or whatever, because ये बच्चे का पैसा है, उसके नाम पे है, वो उसके लिए है। So from that context, what this does, this fund, it's a bit like the SIP thing. SIP तो मतलब it's a fraudulent concept, but it works because it changes the behavior of the investor. वो बोलता है कि नीचे गया तो भी चलेगा, ऊपर गया तो भी चलेगा, right? Which is why SIP kind of works from a practical perspective. Even investing in such schemes, children benefit, बच्चे के लिए डाल के रखे हो तो बढ़िया है, मैं अभी निकालूंगा नहीं। तो फैक्ट दैट तुम निकालोगे नहीं enables compounding. I don't even have to do well in the fund. मैंने इंडेक्स पे भी डाल दिया तो भी वो you will make more money. ये जो this answers your question. Invested money is more, मतलब 3-4% आपको कम मिलता है on your portfolio compared to the underlying funds. This resolves that problem partly because you're there for the long term. And honestly, my advice is that आप बच्चे के लिए डालो, but जब बच्चे का पढ़ाई होगा ना, तब आप अपने पैसे से ही फंड कर लो। Do not lose the compounding impact because compounding kicks in after 20 years, 30 years, right? आपको 25 साल में 100 गुना करना है, हो जाएगा 100 गुना, तो प्यार से हो जाएगा, हमारा स्मॉल कैप फंड हो जाएगा 100 गुना, राइट? ये चाइल्ड बेनिफिट तो ज्यादा हो जाएगा, 200 गुना हो जाएगा। आपको रखना है लेकिन 25 साल 30 साल रखना है। मतलब अगर आपका बच्चा, समझो आपका बच्चा 40 साल का हो गया, आई थिंक यू लुक वेरी यंग, यू आर इन 30s 40 समझो आपका बच्चा आपके उम्र का हो गया, सो ही इज व्हाट 7 इयर्स में,
No, my son is 10 years.
सो 10 इयर्स मतलब उसको 30 साल बचा है। तो वो जब 40 साल का हो गया, यू आर डूइंग वेल आई गेस, पर उसको भी तभी समझो उसको नौकरी करना पड़ेगा या कोई धंधा उंधा कर रहा है, और उसको नहीं करना है यार, उसको जाना है ट्रैकिंग के लिए जाना है 2 महीना, उसको घूमना है। ही शुड बी इन अ पोजिशन टू क्विट हिज जॉब एंड हैव दैट फाइनेंशियल फ्रीडम एंड इनफ मनी। सो आप जब नहीं रहोगे ना, वो आपका फोटो रखेगा, पूजा करेगा तब 40 साल में। दैट इज द पर्सपेक्टिव यू शुड हैव, दैट कम्स फ्रॉम कंपाउंडिंग, एंड दैट इज आई थिंक द वे यू शुड थिंक अबाउट चिल्ड्रन।
And Indian investor,
बट नहीं भी सोचो तो भी चले।
we have not tasted that 30-year thing as yet, right? I think we have been 10, 15 years, most of the investor, average age of investing.
हाँ हाँ, बट आई थिंक पैसा कंपाउंडिंग से ही मिलता है। इंडेक्स तो बना है ना, इंडेक्स का ट्रैक रिकॉर्ड तो है आपके पास।
12-13%. Sir, I think there are some questions coming from attendees. I'm sure this question you get every time. Any opinion on defense sector stock? I think this is one of the sector which is buzzing right now after the India-Pakistan thing.
So इसमें we like the sector. It looks not only from a local perspective अच्छा लग रहा है, even यूरोप में demand spending is going up. Problem है इसमें stocks है नहीं. In fact, we have the best stock in the defense sector. We have a lot of it, and we made a lot of money in it. Solar Industries. It is an explosives company which has ventured into defense and is doing an amazing job. The stock has gone up 20-30 times for us. But generally आप देखो तो एक भारत फोर्ज है, जिसमें defense is one part of it. बट बाकी ये छोटे छोटे कंपनीज है ना, वो लोग ने अभी तक डिलीवर नहीं किया। तो अगर मैं एक डिफेंस फंड खोलूं, मेरे पास 10 स्टॉक भी नहीं है खरीदने। सो द सेक्टर इज गुड, बट यू गॉट टू बी केयरफुल। ऐसे नहीं कि किसी को भी लिया। अभी वो ड्रोन वोन का सब जब वॉर आया तो कोई भी सब जिधर भी ड्रोन है वो कंपनी चली। अब ड्रोन इज अ कमोडिटी यार, वो वाला ड्रोन अलग है। सो यू हैव टू बी वेरी केयरफुल अबाउट व्हाट यू आर बाइंग। सो दैट इज ऑल आई विल से। टॉप डाउन डिफेंस लुक्स वेरी गुड, बट स्टॉक्स है नहीं ऑनेस्टली।
The last two questions. Sir, one question which is coming is from Devansh, that what is the best process to assign weights to the stock within a portfolio? Do you follow a fixed formula?
मतलब हमारे बकेट्स होते हैं बेस्ड ऑन द confidence that we have in that stock, and also if you're benchmark agnostic, let's say I'll have a bucket of 3, 5, 7, even 9 if it is a large part of the benchmark, and the bucket will be based on my uh, return expectation. So we will think in terms of whether it is a buy and forget stock, buy and hold stock, buy and sell, सब fundamental change के हिसाब से। So you think in terms of buckets. और ये diversification concentration का भी सवाल आपने जो पूछा था, I had a presentation long presentation, because we even within ourselves we kind of differ in terms of. So I like to own 25-30 stocks, and a lot of guys in the sector have 70, 80, 100 stocks. So I made a very strong pitch कि नहीं ज्यादा होना चाहिए stocks. उसमें भी आई एम सेइंग कि 30 is very well diversified, 30 is not concentrated. What is concentrated is जो Warren Buffett करता है, 7 stocks, 8 stocks. Whereas when you own 25 stocks, you're owning an average of 4% in a stock, right? So you have to think of sizing also, because actually I forgot to answer that question. You said give me an objective answer for diversification. So agar aap Google karo na diversification, portfolio diversification, you will get this chart where it shows very clearly that the benefits of diversification from a stock, number of stock perspective, peters down very significantly after the 15th stock. तो वो चार्ट ऐसे गिरता है, फिर वो एकदम फ्लैट लाइन हो जाता है. सो वो जब बेनिफिट्स आपका निकल जाता है, मतलब फिर बहुत मार्जिनल रह जाता है, दैट इज व्हेन यू हैव टू से कि अभी मैं इससे ज्यादा डिवर्सिफाई नहीं कर. मतलब द मेंटल मॉडल टू थिंक अबाउट इट, समझो आपके पास टाइम मशीन. अगर आप अभी 2035 में चले गए, 5 मिनट वहां पे रहे, वापिस आ गए 2025 में, तो आपके पोर्टफोलियो में कितना स्टॉक होना चाहिए? एक स्टॉक. बिकॉज आप जाके तब का भाव कॉपी देखोगे और देखोगे कौन सा स्टॉक ने सबसे ज्यादा रिटर्न, तो फिर diversification का कोई पॉइंट ही नहीं है. क्यों diversify? The reason we diversify is we don't know. So which is why you have to think about it probabilistically. So मेरा argument ये है कि if you are a portfolio manager as an analyst, हमेशा आप ये नहीं बोल सकते मेरे को कुछ पता नहीं, पता करो यार, और थोड़ा सा एटलीस्ट नंबर ऑफ स्टॉक्स को कम करो.
Great, sir. I think thank you very much for your honest, and I think this has been one of our very honest masterclass where you have been sharing your insights very honestly. And thank you so much for speaking your heart out. I think this is very useful.
Yeah. हमारा our salary is not linked to the AUM, so we are always honest.
Sir, I think any good books or any good anything you can recommend to investor if they want to. I think what has helped you or anything you want to share with everyone.
Yeah, I have a long list here. You should read Kahneman, Thinking Fast and Slow. It is an easy read and a dense read at the same time. It is about, he is a Nobel laureate, the only Nobel laureate in this field. You should read that. मतलब अगर आपको थोड़ा easy books चाहिए, I think what you should start with is Warren Buffett का जो letters है ना to shareholders from 57 onwards, वो free available. Kindle में आपको free मिलता है, तभी से लेके अभी तक. वो तभी से आप शुरू करो पढ़ने का. You get a very strong perspective about investing. और it's a nice read, मजा आएगा पढ़ने में. और annual report basically. It is all compiled in one book. That is a good place to start. There is common stocks, uncommon profits. मतलब investments books तो बहुत सारे हैं, but I think you should read also outside investing, because investing is not about just investing. Investing, like I said, was the art of investing has to do with a lot of frameworks which have nothing to do with investing. What has probability to do with investing? It has everything to do with investing. But you'll have to read a different set of books to understand base theory. Okay? So, yeah.
Books are, I think you mentioned Warren Buffett letters.
मैं एक काम करता हूँ, मैं बेचता हूँ, प्रीति को मैं बेचता हूँ list, and she can send it to you.
Thank you. I think you can share that. That will
Sure.
be.
Perfect.
Thank you very much, sir. And
Thank
thank
you.
you everyone for joining us in this masterclass. And have a great week.
Thank you. Bye-bye.